Welcome back to Tourist Spot 10.
If you're looking to save more of your hard-earned money, you've come to the right place. Today, we're exploring the 10 U.S. states with the lowest tax burdens on residents. Whether you're considering a move or just curious, stick around as we break down the best states for keeping more cash in your pocket. Let's dive in. Number 1. Wyoming. Wyoming stands out as one of the most tax-friendly states in the U.S., primarily due to its lack of a state income tax. This means residents don't have to pay state taxes on their earnings, which can result in significant savings, especially for higher-income individuals. Additionally, Wyoming boasts relatively low property taxes, further contributing to its appeal as a low-tax state. The state's reliance on revenue from mineral extraction, particularly coal, oil, and natural gas, allows it to maintain essential services without imposing heavy taxes on its residents, making it an attractive option for those seeking tax relief.
Number 2. Alaska. Alaska offers a unique tax environment, with no state income tax or statewide sales tax, significantly reducing the financial burden on its residents.
The state's vast natural resources, particularly oil, play a crucial role in funding government services, allowing for the elimination of these taxes. Furthermore, Alaska residents benefit from the permanent fund dividend, an annual payment derived from state oil revenues, which can amount to over $1,000 per person. This combination of no income or sales tax, coupled with the dividend, makes Alaska one of the most financially attractive states in the U.S., especially for those looking to minimize their tax obligations.
Number 3. South Dakota. South Dakota is another state with no state income tax, making it highly appealing to those who wish to reduce their tax burden. The state's tax structure is designed to be business-friendly, which in turn benefits residents. Although South Dakota does have moderate property taxes, the absence of an income tax helps offset this cost, keeping overall tax liabilities low.
Additionally, the state relies heavily on sales taxes and revenue from gaming and tourism, allowing it to maintain essential public services without placing a heavy financial burden on its residents, making it a top choice for low-tax living.
Number 4. Florida. Florida's lack of a state income tax is a major draw for both retirees and working professionals.
The state's favorable tax environment allows residents to keep more of their earnings, which is particularly beneficial for individuals with high incomes. While Florida does have an average sales tax rate and property taxes, the absence of an income tax ensures that the overall tax burden remains low. Additionally, Florida's reliance on tourism revenue helps to fund public services, reducing the need for higher taxes on residents. This combination of factors makes Florida a tax-friendly destination for those seeking to maximize their income.
Number 5. Tennessee. Tennessee is one of the few states that doesn't tax wages, which can lead to substantial savings for residents.
While the state does impose taxes on interest and dividends, the lack of a wage tax means that most residents experience a low overall tax burden. Tennessee's sales tax is one of the highest in the country, but this is balanced by the absence of a wage tax, keeping the total tax liabilities in check. Additionally, the state's property taxes are relatively low, further contributing to its status as a low-tax state. This tax structure makes Tennessee an attractive place for those seeking financial relief.
Number 6.
Nevada. Nevada's lack of a state income tax is a key factor in its low tax burden, making it an appealing destination for individuals and businesses alike. The state's revenue is heavily supported by the gaming and tourism industries, which allows for the elimination of income tax for residents.
Although Nevada has higher property and sales taxes compared to some other states, the absence of an income tax ensures that the overall financial burden remains manageable.
This tax structure, combined with Nevada's thriving entertainment and leisure industries, makes it a desirable state for those seeking to keep more of their income.
Number 7.
Texas. Texas is well known for not having a state income tax, which is a major advantage for its residents. The state's tax revenues are primarily generated through sales taxes and relatively high property taxes. While the property taxes can be a significant expense, the lack of an income tax allows residents to keep more of their earnings, making the overall tax burden lower than in many other states. Texas's business-friendly environment also contributes to its appeal,
attracting companies and individuals who prefer a state with fewer financial obligations. This combination of no income tax and economic opportunities makes Texas a popular choice for tax-conscious residents. Number 8. Washington. Washington is another state that doesn't impose a state income tax, which is particularly beneficial for high-income earners. However, the state compensates for this by having a relatively high sales tax, which can impact day-to-day expenses. Despite the higher sales tax, the absence of income tax keeps Washington's overall tax burden low, making it an attractive option for those looking to reduce their tax liabilities. Additionally, Washington's economy is bolstered by industries such as technology and aerospace, which help maintain public services without the need for an income tax. This economic strength, combined with a favorable tax environment, makes Washington a desirable state for many. Number 9. New Hampshire. New Hampshire offers a unique tax environment, with no state income tax on wages, although it does tax interest and dividends. This makes the state particularly appealing to those who rely primarily on earned income. New Hampshire's property taxes are relatively high, which can be a significant expense for homeowners. However, the lack of a wage tax helps to balance this out, keeping the overall tax burden lower than in many other states. Additionally, New Hampshire has no sales tax, further reducing the financial burden on residents. This combination of factors makes New Hampshire a low-tax state, particularly for wage earners. Number 10. Montana. Montana is distinguished by its lack of a statewide sales tax, which significantly reduces the tax burden on residents. While the state does have a moderate income tax, the absence of a sales tax means that day-to-day expenses are less impacted by taxation. Montana's property taxes are also moderate, further contributing to its status as a low-tax state. The state's reliance on natural resource extraction for revenue allows it to maintain essential services without imposing heavy taxes on residents. This combination of moderate income and property taxes, along with no sales tax, makes Montana an attractive option for those seeking a lower tax burden. And there you have it, the 10 U.S. states with the lowest tax burdens on residents. Whether you're planning a move or just daydreaming about a tax-friendly life, these states offer plenty of financial perks. If you found this video helpful, don't forget to hit that like button and subscribe for more money-saving tips and tricks. Thanks for watching, and see you next time.